Why 2026 could be a defining year for South African stocks. As global markets adjust to evolving macroeconomic forces, South Africa's stock market, anchored by the Johannesburg Stock Exchange, JSE, stands at a crossroads of global commodity demand, digital transformation, and domestic economic recovery. After a muted performance relative to peer emerging markets in 2025, some analysts argue South African equities now trade at more reasonable valuations, potentially offering attractive entry points for patient, discerning investors. Before we continue, please kindly subscribe, like, comment your opinion, and share the video. Thanks. Moreover, rising commodity prices, particularly gold and platinum group metals (PGMs), have bolstered select resource equities, further supported by a stronger rand and rising global demand for safe haven assets. Against this backdrop, investors in 2026 are looking not only for cyclical plays, but also for resilient businesses capable of delivering long-term growth. Below are 5 stocks that combine strategic positioning, growth potential, and market relevance, a balanced mix of defensive strength and upside exposure. 1. Naspers Limited JSE, NPN. Gateway to global tech growth. Sector: Media and Technology. Why buy? Naspers is one of the largest and most influential companies listed on the JSE, with its equity value largely tied to its international assets, most notably a significant stake in Tencent. This gives South African investors exposure to global technology and internet growth without the need to invest offshore directly. Despite periodic valuation pressures stemming from currency effects and a discount to net asset value, NAV, Naspers remains compelling for investors with a long horizon who believe in the secular growth of global tech and digital platforms. Its diversified portfolio and global footprint position the company as a long-term structural growth play. Risks and considerations: NAV discount volatility, sensitivity to global tech markets. 2. MTN Group JSE MTN. Telecom and fintech momentum across Africa. Sector: Telecommunications and fintech. Why buy? MTN is more than a traditional telecom operator, it's a pan-African digital services player, with strong growth coming from mobile money, digital financial services, and 5G rollout. It benefits from a large and growing user base across multiple African markets, many of which remain underpenetrated in connectivity and digital finance. In 2025, MTN delivered robust returns as investors recognized its diversified earnings and emerging fintech capabilities. Investment thesis: growing digital ecosystem, recurring revenue from services, and network expansion make MTN a strong candidate for long-term growth within the continent's digital economy. Risks and considerations: regulatory challenges and currency fluctuations in operating markets. 3. Sibanye Stillwater JSE, SSW. Exposure to critical metals and energy transition. Sector: Mining and energy metals. Why buy? Sibanye Stillwater is a diversified mining company that has expanded beyond traditional PGM mining into battery metals, including lithium, a metal central to electric vehicle batteries, and renewable energy storage. This strategic shift aligns with global energy transition trends, offering investors exposure to commodities with structural demand growth. Analysts see Sibanye as more than a cyclical miner. Its diversified mix of PGMs and battery metals positions it to benefit from both commodity cycles and long-term thematic growth. Investment thesis: balanced exposure to traditional and future-focused mining segments, with potential catalysts from rising metal prices. Risks and considerations: commodity price volatility and operational geopolitics. 4. FirstRand Limited JSE FSR. South African financial services anchor. Sector: financial services and banking. Why buy? FirstRand is one of South Africa's largest and most diversified financial institutions, offering banking, insurance, and investment services. With strong brand loyalty, robust capital positions, and diversified earnings, FirstRand is positioned to benefit from economic recovery and financial deepening in domestic markets. Banks often act as economic barometers. With stabilization in interest rates and credit growth, FirstRand is well placed to deliver both dividend income and capital appreciation. Investment thesis: steady earnings, strong balance sheet, and defensive qualities in uncertain markets. Risks and considerations: credit risk during economic downturns, regulatory pressures. 5. Anglo American Platinum, JSE, AMS. PGM specialist with industrial demand tailwinds. Sector: Mining, Platinum Group Metals. Why buy? Platinum and other PGMs play a key role in automotive catalytic converters, hydrogen fuel cells, and industrial applications. Anglo American Platinum is a pure play on this niche, with prospects buoyed by rising commodity prices and secular demand in both automotive and green energy sectors. Platinum prices have historically been volatile, but a sustained industrial recovery could underpin strong long-term performance for shareholders. Investment thesis: focused exposure to PGMs, which benefit from both cyclical and structural market forces. Risks and considerations: commodity price swings and production costs. Conclusion: balancing growth and resilience in 2026. The 2026 investment landscape in South Africa offers diversification across sectors from global tech exposure via Naspers to commodity leverage with Sibanye Stillwater and Anglo American Platinum. From domestic financial strength with FirstRand to digital transformation at MTN. These stocks represent a blend of growth potential and defensive qualities, a sensible starting point for constructing a balanced portfolio in the year ahead. Thanks for watching. Please kindly subscribe and comment your opinion.